All right, all right. What's up? What's up, traders? It's Shimano Trader. I'm going to be doing a quick lesson for you guys today, or just share with you guys what I've learned from Rader Trader. Rader Trader is a young trader. His real name is Andrew Trader, I believe. Met this guy online on Instagram, and he was able to show me some something that I never knew about the option chain, how to read the option chain, and how to kind of look at the anticipated range of a stock for the week. So that's what I'm going to show you guys here. But before I show you how to do it, I'm going to show you what happened to me last week. So I'm going to put a couple of stocks on here that I did this strategy with last week on Sunday. And it is Sunday today, February 18th, 2024. It's about noon here on the West Coast. A little bit of a drizzling day out here. Hope wherever you're at listening to this, you're doing well. So I'm going to go ahead and just blow up these four grids. I'm going to use these four, just kind of revisit the strategy that we did last week that I did on my own. And I'm just going to see how it played out now that a week has gone by since I last did it. So we're going to start with Peloton. Peloton is a stock that I have in my long-term portfolio. It's just something I'm going to hold on to for right now. And I'm holding on to it because I think it is a... let me just drop the volume here on my... It is a stock that I am... looking to keep in my long-term portfolio. So it's been beat up. It was a stock that I think back in the days it was it's worth a lot of money. Let me see. So yeah, you go back to the COVID days. Peloton was $14, but that was a daily chart. Let's go back to the weekly chart. Yeah, Peloton was once worth. Oh, it's a 4-hour one here. Yeah, Peloton was once worth $138. So the stock was once worth $138. And I need to add like a monthly one. I don't have a monthly one here to show you guys, but anyway, so this stock was back in let's see, this was back in February of 2021. This stock was worth $138. I can't believe I can't go further back. I should be able to do that. I just don't know how to do it right now. It's just so lopsided here. Let's go 5 years, and we'll do it by the month. We'll just add that on there. There it is. Apply. Boom. Okay, so let's look at that time frame now. There it is. So now you can really see how this stock, right? There's a 5-year look at a monthly chart. So this thing hit $171 back in January 1st of 2021. So this is all around the COVID time, right? This is December 2019 here. This candle here is March 1st, 2020. So look at the run up, right? Everybody was home. We all were gonna be home and stay home for a while, and lockdowns and all that stuff. And Peloton really flourished. Like several stay home stocks, right? Like Zoom, anything that had to do with just, I guess, providing a service or providing a way to entertain you while you were locked down, obviously popped during the that period of time. So that was that run up, right? It peaked out at 171, and then I think it might have even got like I don't even know what the hell this is right here. It's just a nasty spike. You know what? I don't even know. That's something I left on there. Anyway, so look at this, right? $171 at one point, and obviously after that period of time in our lives, the stock has just been destroyed. It's now worth $4.54, if you can believe that. So anyway, getting a little bit off track here. So in the option chain, which I'll show you a little bit later, it reveals to you what the anticipated move is going to be of the stock, right? Like what the anticipated move is going to be, and you're able to chart that on the map. And what I really like about that is because you don't have to waste your time kind of charting up here, right? Like, oh, let me chart these levels, or it can't go any lower, right? Or charting these levels over here. Like, why waste your time trying to chart those levels if the stock is not expected to move in that direction anyway. Now, obviously, this is all probability based, right? So there is no 100% strategy for anything that we do. But let me share with you this one that I've learned and see if how you like it. So last week on Sunday, I'm gonna show you in the option chain where it shows you what the anticipated move of the stock is going to be for the week, right? So week ending 216, which was Friday, these were my lines, right? And then when you look at the daily chart, right? So this would have been is this Monday? No, so Friday, Thursday, Wednesday, Tuesday, Monday. So this had to be Monday 212, right? That should be right. Let me just verify that on my calendar here. Yeah, so 212. So your 212 move happened. Let's go here. All right, so this is the start of the week right here. So this is the start of the week. So right off the bat, right, I did these lines before the market opened. So right off the bat, right, this stock, right off the bat, it hit the anticipated move. I think it's got as high as $5.07 on Monday, right? The anticipated move was $4.97. Once it hit that number, right, it just never hit that number again, right? This was the range on Tuesday, Wednesday, Thursday, maybe even Friday. Look, kind of heading down, right? So I just found it very interesting, being that this is the first day of the week, right? It already hit the top of the range. It never went to the bottom of the range. But I found that very interesting how it hit that top of that range there, and that was part of the anticipated move. Even though it never went to the bottom, you can see that it did hit at least one of the ranges, which I found pretty interesting. And then when we go over to Tesla, and Tesla was a stock that they usually say do not do the strategy on, and only because Tesla's day traded a lot, so there's not really a lot of I guess you can say a lot of people don't hang on to the stock very much, so the anticipated move can be skewed. It may not apply only because people are trading the stock in a certain way. I don't know if that makes sense to you guys, but I guess stocks that are day traded a lot, this strategy may or may not apply because of the amount of people trading the stock, not necessarily holding it long term or like a stock that you're going to buy and hang on for a while. It's really just being day traded. So sometimes this strategy may not work as you would hope. But after saying that, I'm going to show you the strategy here on Tesla, and it actually worked out as you would hope, right? So here is Friday, Thursday, Wednesday, Tuesday, and Monday. So let's focus on that, right? So there are your candles for the 5 days: Friday, Thursday, Wednesday, Tuesday, Monday. So again, just like last week, I put in my lines, right? My anticipated move of Tesla for the week. And what do you know, right? Tuesday, visited the bottom of the range. Wednesday, visited the bottom of the range. Thursday, major move to the upside. Friday, finished the day off at 199.95. The anticipated move for the week was 184.46 to the downside and 202.68 to the upside. Now, wouldn't you know that it actually moved in that range for the week, right? So Friday, Thursday, Wednesday, Tuesday, Monday, we're focusing off this red candle, right? So that's where it opened on Monday. It's kind of stayed in the middle, maybe the lower part of the range, visited the bottom of the range. It breached it, came down here, did it again on Wednesday. Thursday, we had the major push up and ultimately finished the week at almost $200. Now, that was pretty cool to watch, right? Because let's say you set up these lines on Sunday night, and then you just kind of chill maybe for the position here on Monday, kind of see what it does. But around here, based on what we're seeing, you kind of gain confidence that maybe that's how it's going to revisit the bottom, and it's fulfilled the anticipated move to the downside, and now it's going to start looking to the upside. Just like with Peloton, you saw how it hit the top of the range and it started kind of working towards the bottom of the range. So I found that super, super interesting and super cool. So that's two examples so far. Let me show you Boeing. What happened with Boeing here. So we're blowing up Boeing. We're going to put it on the daily chart. Did our moves on Boeing as well. So let's get a little closer here. So now we have Friday, Thursday, Wednesday, Tuesday, Monday. So here is Boeing opening up Monday in the middle of the range. Tuesday, we're already at the bottom of the range. Wednesday, already at the bottom of the range. Thursday, we were bouncing, but then Friday, we just got pushed down. So unlike Tesla, which was a lot more of what you would want to see in such a strategy, at least here on Boeing, you know that it's hit the bottom here, and you could have just gotten faked out thinking that it hit the bottom of the range and now we're on our way up. That did not happen here. I guess in this situation, or when you're deploying the strategy, you got to be careful, because in this case, maybe the move was to just stay in puts, right? It was trending down anyway. It hadn't changed direction. Maybe the move was here to stay in puts. Regardless of the fact, I guess what I'm trying to show you guys here is that there is something to this strategy, but obviously it's not, it's going to require some management. It's not like set it and forget it kind of strategy, I don't think. And then on SPY, I think we did it on the SPY too. Let's see how that played out. So let's blow the SPY up here. And let's look at the daily. Yeah, we did do it for SPY. So check it out for SPY. So for SPY, Friday, Thursday, Wednesday, Tuesday, Monday. So what did it do? Monday, obviously, you'll see as we're setting these up how they're usually right in the middle, like the candles right in the middle of the range. So here we open up Monday, kind of just didn't really go anywhere. But then Tuesday, we were at the bottom of the range. Wednesday, bounced off that bottom of the range. Thursday, away above it. And then Friday, we kind of had like basically maybe an inside day there. But just like with other ones, right? It's like we did hit a range. We did hit a level, whether it was to the downside or to the upside, or in Tesla's case, both levels. We hit the bottom of the range and the top of the range. So I'm seeing a lot of opportunity there, and more on the swing side and less on the scalping side when deploying the strategy. So what I'm going to do now is we're going to just reset our lines for these 4 stocks. And see what next week is going to bring us based on that. So let me go to my studio here and move my capture to let me move my capture over to the screen I want to take you guys to. So hang on a second here. Oh yeah, look what it did there. Okay, so video capture, window capture. And let me put you guys on the main screen here, which I believe is this one. Okay, it's that one. All right. So let me take you over to this screen here, and I'm going to show you exactly how I visit the option chain and what I do there. So let me go to my trade, and let's start with SPY. So SPY, here's SPY, and we're waiting for the chain to load up. So I'm doing this on a Sunday, and obviously the market is closed tomorrow. It's President's Day tomorrow, and the market is closed. So I think that the anticipated move should not change from Sunday to Monday, because the market is closed on Monday, even though futures are going to be opening up today. So anyway, at least you'll learn what needs to be done, and you'll be able to deploy it, and then we'll go from there. Okay, so next week, right? These are all the this is called the option chain, and I'm going to open one up here for you guys, right? And you see what the option chain is. Now, obviously, this you can, on the option chain, you have zero DTE, right? So because you have zero DTE, this is going to tell you what the anticipated move is for that day, right? But we're looking for the week. So next week ends on the 23rd. So we're looking at weeklies, which is the 23rd right here. You see this one that says weeklies. Now look at the weekly, and as you look all the way to the right of the weekly, you see here there's a 14% anticipated move. I'm sorry, 12. Say 12. Oh, it's this one. Why is there a 26? That's interesting. Am I tripping? The week is from the 20th to the 23rd. There's a 26. Oh yeah, because that'll be 0 DTE. All right, sorry about that. So here we go, 26 weeklies, February 23rd. This is what we're trying to get to, right? This is the weekly option change for SPY, and we see that it's a 14.45% anticipated move to the up or to the downside, which is about $6. You see how it says plus and minus here? So that's plus or minus 677 to to the up or to the downside, right? So let me just get a pen here so I don't have to come back to the screen. So we're plus minus 6.77, which is about 14.45%, right? That's the expected move of the SPY this week coming up. So we're going to grab that information, and now we're going to go over to our SPY. So let me go over back to my studio here so I can change the screen here, put it back on SPY. Boom. Okay. So now we're going to go to the SPY, and we're going to blow this grid up here. I'm going to open it up. All right, so we're going to open this up, and now these were last week's lines, right? 216, 216. So now we're going to edit this, and we're going to put the week ending 223 right there. I'm going to go to the same thing with this one, edit, and we're going to put 223 like that, because that's what the week that it's going to end, right? And we have 6.77 to the upside and to the downside. So we know that the market closed on at 499.51. So we're just gonna grab our calculator. Let me see if I can. Let me see if it lets me put it over here or not. I don't know if it's gonna. Let me see if it shows up on my OBS. I don't know if the calculator shows up on the screen here. It doesn't look like it does, but okay. Anyway, so here's my calculator. So we're getting 6.77, right? So we closed at 499.51. We're gonna add 6.77. So that means to the upside, we have 506.28 to the upside, 506.28 to the upside. And if we go to 499.51, we're going to minus the 6.77 to the downside, and we have 492.74 to the downside, right? So that's all we're going to do to our charts now. So we're just going to grab these lines here. We're going to edit the bottom of the chart here. And we know that to the downside, we have 492.74. That is our downside play, right? And then we have our upside play here. And we know that that one's going to be 506.28, which is lower than last week's anticipated high, and even though we never hit that. Okay, so this one is lower. So I think by doing this exercise, you're gonna learn a lot. I don't know why this line is green too. I'm gonna just change it to a different color just because I don't know what that's probably another zone that I have. It's like an all-time high. But anyway, there you go. So now we've set up I don't know why this is there. Let me remove that. Okay, so now we've set up our chart here, right? And now we have that for the 23rd, we have an anticipated move to the upside of 506.28 and to the downside of 494.60. Oh, it should be, I'm sorry, guys. Oh, no. I was looking at the orange line. 494.61, but that's not it either. It should be 492.74. That's what it should be to the downside. Wow, it's like right on this line here. Interesting. Are you serious? Is it the same line? No, something's wrong here. Hold up. What happened here? You see? I messed with this line here. I did mess with this line. Yeah, that's what happened there. I'm just going through my yeah. So all right. Let me see if it was gonna redo it. No, it's not. Okay, guys. So we're gonna redo this real quick. I don't know what happened there, so I'm gonna just redo it. 2.23, right? To the upside, we need 506.28. That is our upside move. Our downside move is 2.23 here. Our downside is going to be 492.74. 492.74. That is to our downside. All right, so that's our range here. I'm gonna just change this line again to a different color, just so but I don't even know when I did that. That was so weird. All right, so I'm gonna leave that line on there. I think that's the January 22 high. We've already breached that. So here, let's focus here. Friday, Thursday, Wednesday, Tuesday, Monday. So now this is our anticipated move for the week of upcoming week, right? So the 23rd. So that is your range there. Let's go back to Boeing. We're gonna do the same thing for Boeing now. All right, I'm gonna go to the option chain. Let's go together just so you guys can learn that again. I don't have a problem doing that. I just gotta change it on my OBS real quick. There it is. Okay. So let me go to that screen real quick. Okay, so now here we're gonna change this to BA, right? And for BA, this is our weekly 2023. This one doesn't have 0 DTEs. Obviously, you don't see like 21, 22, nothing like that on this option chain. And then we're gonna look at the week. So same thing here. So there for BA, look at the move on BA. We have an anticipated move of $6.33, right? It says 33%. Implied volatility. So maybe that's not the percentage it's gonna move. That's just the implied volatility. So you can expect some volatility. Expect some volatility on Boeing coming up here, 33%. I gotta read into that, see what that means. But the move is 633, right? And it closed. So let's go back to our chart here. I'll bring you back. Okay, so now we're on Boeing. Perfect. So we're gonna do the same thing for Boeing. It's a $633 move. Let's bring up our calculator. Here's our calculator. Like, it should have been smaller. I don't know why it's so damn big. Oh, there it is. Okay. So we know that Boeing closed at 203.89, right? So the plus move here is 6.33. So we have 210.22 to the upside, right? And then we have 203.89. We're gonna minus 6.33. So we have 197.56 to the downside. Okay. You guys got that? Perfect. I think you guys, I should bring you guys over. I did bring you guys over. Perfect. All right. So now all we're gonna do is just chart that, right? So just what we did. So we're gonna change our week here. We're gonna edit this. We're gonna make it 223, right? And then we're gonna grab the value. We're gonna make that 210.22. We know that that's the anticipated move to the upside, which is lower than last week. That's pretty interesting, right? And then to the low side, we have 197.56. And we're gonna make this 23 like that. And now we have it to the downside. So something that I've noticed right away is that in just doing two stocks so far, I've noticed that we're revising our ranges to the downside. So it almost feels bearish, or at least gives you a bearish bias for next week, just because things are lower than what they were. But all right, so there you go. So now we've done the anticipated range for Boeing. And as you can see in SPY, and now you're seeing in Boeing, is usually right in the middle of, you know, wherever it's going to move. But this is the anticipated move. I think that is such a great tool, because this is how people are positioning themselves in the market, on the options market. So unlike stocks, right, you don't know when somebody's going to place a trade. You just know when they've made it. But within options, you know that people have put money on the strike price for Friday. And just like in gambling, the odds makers can see that, right? So sometimes watching Rader Trader show you option flow, and it shows you how heavily somebody's positioned to a downside or to the upside, and you see market makers kind of try to balance out the market. If you're real heavy on the put side, then they'll start rising the value in some of these stocks to shake people that are in put positions out. At least that's the way I understand it in my mind. And it seems to be a very powerful way to trade, because you can see stuff, how people are positioned in the market. So that's pretty cool, at least in the option market. All right, so we're gonna do two more, and then we'll be done. So we did it for we've already done it for the SPY. We've done it for Boeing. Let's go ahead and do it for Tesla. So we're gonna go ahead and maximize this grill. Let's take you guys back to the option chain. Let me just go back to my thing here. Thinkorswim, there we go. Now I'm gonna go to the option chain here. I'm gonna put Tesla. Now Tesla. So yeah, you see how Tesla doesn't have 0 DTEs. It just has weekly. So we can see that all the way across. We can see that Tesla has there's gonna be a lot of volatility, right? 52.62% volatility, and we have a move of 9.87. So we're gonna grab 9.87. That is our move for Tesla. So let's go over to our Tesla chart. I'm going to move you guys over here. Give me a second. There we go. So this one's pretty interesting, right? Because this one did hit the bottom of the range and the top of the range. This was such a revealing strategy, at least so far. So let's do it again. So we're gonna grab this. Oh, we gotta get our calculator again, right? Let's get our calculator again. Oh man, I don't know why that thing's so big. Okay, so I don't know if you guys can see it on the screen or not, but so this stock closed at 199.95. It has an implied volatility of 9.87. So that'll be 209.82. So we're gonna grab this. We're gonna and we're gonna make this 223. And we're gonna grab our value and we're gonna make that 209.82. So we'll make that boom. See, unlike the other two that we just did, this one's moving higher. And then the lower of the range for us is going to be 199.95 minus 9.87. So we have 190.08 to the downside. So we're gonna edit this one right here for us. We're gonna put 23 here because that's next Friday, and we're gonna put our value at 190.08. Last week it was 184.46, so that's pretty interesting. 190.08, that's gonna be our downside. So now boom, and then let me remove this here, and there you go. Usually right in the middle, right? Like right in the middle of where stuff ended. More or less kind of in the middle of where the range is. So there's our range for Tesla. Next week we have 209.82 to the upside and then 190.08 to the downside. All right, so and then we're lastly going to do what do we have left? I think Boeing we did, SPY we did. We haven't done Peloton, so we'll do Peloton. Peloton doesn't move as much as these other stocks, but we're gonna do it, I guess, just to go through the exercise together. So let me bring you guys right back over to the option chain again. There we go. Let me go over there, and now we're gonna use Peloton. Peloton. All right, Peloton. All right, look at the volatility on implied volatility on Peloton next week. It's pretty wild. It says 94.65%. I'm gonna look up the definition of implied volatility, and I'll do it for you. But 40 cents up or down. 40 points, 40 cents. All right, that's the move for Peloton. So very small mover on Peloton. So let's take you guys back to the Peloton screen. Oh, it doesn't. What's going on? Let's see if it takes you back down to Peloton. Oh, come on, be nice. Oh, this is other charts I have open. Oh, there it is. It finally moved, you guys. Okay. So we're on our Peloton chart. 40 cents is the move. Look at Peloton last week. We know Friday, Thursday, Wednesday, Tuesday, Monday, it hit the top of the range early in the week. And I think, since it hit it so early in the week, I don't know if your strategy would have been to just maybe start taking puts on it just because it had already hit that level. So we're going to continue to play with the strategy. Okay, let's focus here. Okay, 23rd. So 23rd. And we have a 40-cent move, right? So we have 4.97. Let's bring up our calculator, a big old calculator here. We know that Peloton closed at 4.54 plus 40 cents. We know 4.94 to the upside. Which one was I doing? The upside or the downside here? I was doing the upside. Okay, so 4.94. Not much movement here, right? To the upside, right? So that's how that moved. And then 4.54 minus 0.40, we got 4.14 to the downside. So we're gonna edit that and put 4. Look, just the difference of a penny, not much. Yeah, this is a slow mover. This is not an exciting stock. I recognize that, but it is one that I'm just keeping an eye on because I want to just continue to build a long position on this over time, and that's kind of why I'm watching it. It's just something else to watch. It's really inexpensive too. Okay, so so that is your range for the week. We got 4.94 to the upside and 4.14 to the downside. Looking at this stock just really quick, we got the I think this is 21-day moving average. Purple is 8 and the green is 5. One of my favorites for intraday. This stock is it's below the 8 and 21 day moving average. Usually that's a little bit bearish, but you know, it's coming off of a pretty nasty sell off. All right, there you go. So we've gone over this strategy. This is basically looking at option flow, and on Sunday nights is probably the best time to do this, because when you do it on Sunday nights, then you're able to when you do it on Sunday nights, then you're able to see what the implied volatility is going to be, or what the anticipated move is going to be. Oh, that's right, I said I was going to do that for you guys. So bear with me really quick. I'm going to try to see what implied volatility means. Okay, so implied volatility and options. Okay, so implied volatility approximates the future value of the option, and the option's current value is also taken into consideration. Options with high implied volatility have a higher premiums, and vice versa. So keep in mind that implied volatility is based on probability. So I think implied volatility, what that means to me, that means that if it's going to have a high implied volatility, that means the premiums are going to be more expensive. If it has low implied volatility, that means that the premiums are going to be not as expensive. Yeah, so let me see if this is the same version here. Implied volatility is one of the deciding factors in pricing of options. Buying option contracts allow the holder to buy or sell an asset at a specific price during a predetermined period. Implied volatility approximates the future value of the option, and the option's current value is also taken into considerations. Options with high implied volatility have higher premiums than vice versa. So yeah, I would just say that that's what that means. It means that if your volatility is high, you're going to just pay more for the premiums. Might be that there's going to be more action in that stock. So that makes sense. Implied volatility, a lot of action in that stock. Therefore, it's going to be more expensive as a result, just like the law of supply and demand, right? There's more demand for it. Therefore, the price is going to go up. So there might be something up with options. All right, traders, I think that's it. It's about a 30-something minute video. It's my very first video that I've ever done that is not a live stream, and it is because I've gotten some very positive feedback on the strategy from the people that have been joining me on the stream, and I've gotten some special requests from people to actually make a video on how that strategy works. So just to recap really quick, I showed you the strategy, how it worked last week, you know, compared to last week, how I did it. And then I showed you how I go about and set up that strategy. Now you should be able to do that with just about any stock. There is something to stocks that are day traded a lot that sometimes that strategy may not work, but funny enough, it worked really good on the stock they mentioned, which was Tesla. So the strategy is not very applicable with a stock like Tesla, but funny enough, that's the one that I worked on to the T. So I hope that this gives you guys something to add to your checklist before entering and exiting a trade. I love to scalp and I love to day trade, but I'm also learning and just watching myself trade and just paying more attention to what I'm doing, that the big money is in the patience and waiting for the big move and getting it set up in the big move. So this strategy works with something like that because you can pretty much anticipate or have a strategy you can deploy looking at a weekly time frame based on this. So hopefully that helps. Please leave some comments, give me some feedback, let me know if this has helped you, and you know, just any positive feedback would be appreciated. All right, guys, I am Shimano Trader. This is the spread, I guess, tutorial or lessons, but please make sure that you guys check us out Monday, Wednesdays, and Fridays, 3 times a week, 6 a.m. to 9 a.m. Pacific. And check out our show, subscribe to our show, follow us on Instagram at Shimano Trader. So we try to build up a following of our little show that we got going on. But other than that, you guys, thank you so much for joining me today. I hope this was helpful. Please feel free to engage me in comments or however you want to reach out to me, and I'll try to help you out as best as I can. And other than that, thank you so much for checking us out. Please, again, don't forget to subscribe to the show and drop us a comment and a follow. Thanks so much, guys. We'll see you guys Tuesday. Well, Tuesday market opens. I won't be online, but I will be here on Wednesday. So thanks so much, and have a good one. Peace.